Right, Lion Army, so as you can see, I'm currently $350 in profit. I'm going to just close it off now. And what we're going to do now is we're going to learn why we placed this trade and why this strategy is so good when day trading. Right, so the trade we placed is actually USD CAD. We placed the trade around here with the bearish engulfing candle, but we obviously need a few indicators. Since I love trading with the moving averages and I believe they are very accurate and probably the best Forex indicators, we're going to use two of them. Now go inside the indicators tab, type in moving average, double click on it and exit the tab. Once you do that, leave one of the moving averages to the 9th setting and the second one, use the length of 200. This is a great moving average trading strategy. I can guarantee it, you will love it when you're going to be day trading the Forex markets. Now, the simple principle with this strategy is super easy, right? 200 moving average, as you can see over here, is well above the candlesticks, right? All of these candlesticks over here are well below the moving average line of 200, which is good. It shows that the trend currently is towards the downside, right? Now the other moving average is our 9-period moving average, which typically acts as an entry point. So as you can see, it's trending towards the downside. Once it pulls back, like we saw a little bit over here, and we get a bearish engulfing candle as confirmation, you enter the trade short. So let's say we short the position, and boom, it was a nice trade, 16 pips profit easily on the 5-minute time frame. Let me just quickly mention that we will not be using any stop loss level. Your stop loss is actually the 9 moving average. If the candlesticks decide to cross the 9 moving average, it starts to shoot up. You don't close off yet, but you wait for the timer over here on the right hand side of the screen. 2 minutes left in this case. If this decided now, this candlestick over here, the blue one, decided to shoot towards the upside and cross the 9 moving average, this is where we will close the trade. Otherwise, we are trending towards the downside and we are keeping the trade running short and we don't close off the trade. Yes, I did close off the trade at the start of this video because I was happy with the profits. If you're happy with the profits you gained, it took me 5 to 10 minutes to earn this $300. If you're happy, close it off. But most of the time, I recommend if you're trading, just keep increasing your take profit level and maximize your profit gain. As long as the candlesticks are not crossing this 9 moving average, you're good to go, and then you can carry on moving towards the downside and making money, right? So that's the simple explanation of the strategy. Now what you can also use is different time frames. So let's say currently we are on the 5-minute time frame. We need to have a look what's going on the higher time frames to get the overall bias of whether the trade will continue running towards the downside or not. So in best case scenario, you should be analyzing, the 1 hourly time frame at least. So if we have a look, 1 hourly time frame is approaching the 200 moving average zone, right? So the 200 moving average acts as a good support and resistance area. And since there's 9 minutes left until this candlestick closes, and if it's gonna close below the 200 moving average, it's gonna go short. Otherwise, you're expecting on the 1 hourly time frame for this candlestick to push back towards the upside because it acts as a strong buying area on the 1 hourly time frame. So let's have a look on the 30 minutes. As you can see, 30 minutes has crossed, so bearish scenario. However, 1 hourly is telling us that it could bounce back, so we need to be aware of this. And if you see this, I recommend to close off the trade because very likely it's gonna bounce back up towards the upside, probably gonna give you a pullback, consolidation, and then continue to move down. So a push exhaustion scenario to the previous area sensitivity to probably retest this previous low and then probably continue to move towards the downside with a push exhaustion push scenario after this 200 moving average break. But typically what I do is have a look at the 1 hourly, then I go reverse engineer everything. 45 minutes, as you can see, it's crossing on 45 minutes. If it's not going to pull back in the next 8 minutes or 7 minutes in this case and still will break this 200 moving average, then the bearish bias is definitely continuing to go down. Now let's reverse engineer everything. 30 minutes, as you can see, as I said, 200 moving average and 9 is crossing, bearish scenario as well. 15 minutes, same thing, bearish, and 5 minutes continuing to move down. So now you're expecting the market to push back up on the 1 hourly time frame. So that pushback up could probably be around this area zone, or if we have a look at the previous area sensitivity, yeah, it seems like this area zone just over here seems pretty damn good, because if the market decides to push back up, it will be in between these two moving averages. But as I said, look, 1 hourly, there is a 200 moving average somewhere over here on the 1 hourly time frame, so we know very likely some sort of consolidation or a break of this 9 moving average is going to happen, and we can see some sort of consolidation. So already buying orders are kicking in at this moment as we speak. If this crosses the 9 moving average, you instantly would close the trade off. But I like, as I said, looking at it, let's say 1 hourly time frame, I like to know what's actually going on the higher time frames, since the higher time frames are definitely more accurate than the lower time frames, especially when you're day trading and scalping. So now look at this GBP NZD trade, 5-minute time frame, right? So let's try to place a nice short trade, right? 200 moving average around here, 9 over here, bearish engulfing candle, nice trade towards the downside. Previous lower low obviously bounced off over here, trying to make a new lower low, which is a good thing. If we have a look at the 1 minute time frame, see if there will be a new lower low, and as we can see, there is. So let's just not waste any more time and find GBP NZD and sell the trade off. Right, so we sold the trade off somewhere around here. I was a little bit late because actually my currency pair was a little bit hidden. I don't know why it was hidden. I think I reset my MetaTrader charts. That's why they're a little bit flustered and not in the right positions. So I had to find one, and that kind of wasted my entry. And as you can see, it keeps falling towards the downside. Let's have a look at the 5-minute time frame. Look, bearish engulfing candle making new lower lows, breaking this previous area of sensitivity, following, you know, the 209 moving averages, going towards the downside. Very nice trade. And as you can see, we are currently $22 in profit already. We did miss the good entry point, which is super lame. I wish we had a better entry, but as you can see, it's shooting towards the downside very nicely. Let's have a look at the 15-minute, same thing. 30-minute, same thing. As you can see, trying to break off 9 moving average, which is very good as well, in between the 209. And let's have a look at the 1 hourly time frame. Same thing. Look, a nice bearish engulfing candle recently, probably gonna retest this area zone. Now developing a nice bearish engulfing candle once again, and it will probably be a bearish engulfing candle since we have 1 minute and 35 seconds left until this candlestick closes. So, you know, it's following the same downwards trend. We can see it on the 5-minute time frame as well. Let's have a look at our trade. $68 in profit, and you know what, there we go. I'm gonna close off this trade. $60 in profit. I just showed you twice now that you can make money with this strategy. I just wanted to make this simple little video to show you guys you don't need to overcomplicate things. Honestly, Forex can be easy once you know all the fundamentals. Trust me. I use sometimes currency strength meters as well. So as you can see on the 5-minute time frame, NZD is 6.6, GBP is 6.5. So overall, it's quite equal, but NZD has the edge, and that's why it fell down. And in some cases, I use these numbers as well. This is basically large speculators, what the hedge funds are doing, big money whales, basically what they're doing. Although this data is a little bit out of date, should I say, it's still very good if you're gonna find a nice trending direction. If it's trending towards the downside, then as you can see, sales orders are decreasing, let's say, for Australian dollar, 17,000, 24,000, minus 28,000. So for the previous 3 weeks, as you can see, it has been shooting towards the downside. Very likely Aussie will continue its bearish trend, which should reflect your trading scenario and continue to shoot down. We are smashing the markets as always. GBP AUD, take profit on USD, Swiss franc, Euro USD, take profit. Some other take profits. GBP CAD, we reached take profit free last week. That was pretty damn awesome, and we continue to dominate. Obviously, some losses do happen as well. We're not perfect, no one is. But if you want to join, I still have a 24-hour sale going. I thought I'll do it for another day, just to be thankful for everyone that watches my videos and wants to join our VIP services for cheap as possible. And without further ado now, Lions, have a wonderful day, stay safe, and goodbye.